Hi. Well, one of the things I know we're all interested in is financial freedom. That point where your investments produce enough income that you never have to work again for money. Other generations have called it being ready to retire. The other thing I know is that as you're building your portfolio, it's really important that you be comfortable with your investments, comfortable with where your money's placed and how it's paying you. So, how would you like to be able to determine your investing comfort zone with just two simple questions that take less than 1 minute to answer? Yeah, well, that's what this report's all about. And stay till the very end because there's a special bonus for you if you do. And I'll see you on the other side. So here we go, just two simple questions to find your investing comfort zone. And here's me, Dyke Drummond at Investor Tours University. And let's start by looking at the mind of the investor. Now, it's been my experience that most investors, most people in general, know really clearly what they don't want. Now, that's not much use because what we really need to know is what you do want. Because when you know what you do want, that gives you focus. The ability to focus on what you want is power, especially in investing, because you can become much more effective in screening opportunities. And when you focus on what you want, you know that you'll always be within that comfort zone when you do actually enroll in an investment. You'll sleep much better at night. So think for just a second. What do you want or need from an investment, from your next investment? What is your investing comfort zone? Fortunately, you can get there with just the answers to two simple questions. And here they are. Number one, cash flow or appreciation. Number two, active or passive. Let's drill down on these a little bit. Cash flow or appreciation refers to how do you want the investment to pay you. Cash flow, this means you need a monthly or quarterly check from the investment. For most people who need this, it's because they're actually living off of their investment income. And it's a really important thing to know right up front. Appreciation, that means you can wait for a big check at the end. Most people in this category are actually growing their portfolio to the point where they approach financial freedom. Question number two, active or passive. This refers to what role you will play in the day-to-day management of the investment. Active, hands-on, doing some of the heavy lifting, participating in the day-to-day on-the-ground management. Or passive, which basically means send me the checks and somebody else is going to handle the day-to-day management. Most traditional investments, stock, bonds, mutual funds, are passive investments. And obviously the answers to these questions exist on a continuum. Here's what I mean. There are pure cash flow investments, like a money market fund. There are also pure appreciation investments. I come from the commercial real estate world, and in that world a good example is a raw land development project, where you buy a piece of raw land and you get all the permits and engineering to be able to build, for instance, a housing development on it. You'll put your money in at the beginning, you'll get a lot more out at the end, but you'll receive no cash flow along the way. That's a pure appreciation investment. And obviously there are things in the middle as well. Another example from commercial real estate is apartment complexes. Now that may seem a little strange. You may think that an apartment complex is actually a cash flow investment. And that's true. You'll get monthly checks if it's managed correctly. At the end, though, you're going to get a nice appreciation check too, to the extent that you've done a good job at growing the income. Let's look at the active or passive side. An active investment, that same raw land development, if you're working with the engineers, if you're the one going to the city council meetings and getting the entitlements, that's active. Passive, again, lots of things fit here. Savings accounts, mutual funds, CDs, stocks, bonds, exchange traded funds, everything with a fund at the end. Typically somebody else is doing the heavy lifting. And then there are things in the middle. That same apartment complex. If you've got 2 or 3 partners that are sharing the workload, that's a blended investment. So here's the real power here. Put these two questions together and you get 4 possible answers. I call them the 4 investing quadrants. And you've probably seen a 4-part diagram like this before. Let's look at this. Quadrant A. You're an active participant in an income investment. One example of this is if you invest in a network marketing business. You're going to be working in it every day. You're going to get pure income as a return. It's a good example of Quadrant A. Quadrant B, you're an active participant in an appreciation investment. That raw land development, again, is a good example if you're the person doing the day-to-day procurement of the entitlements. Here we go, Quadrant C. You're a passive participant in an income-oriented investment. Money market fund is about as pure an example of this as you can find. And Quadrant D, you're a passive participant in an appreciation investment. Here's where that raw land development, you can play a different role. In most raw land developments, there are a number of passive investors, folks who put in money and receive appreciation but don't do the day-to-day procurement of the entitlements, don't go to the city council meetings and work with the engineers. That would be a Quadrant D investment. And there's all sorts of blends here too. Remember that apartment complex? It's a blend of income and appreciation. Well, you could be the active manager of that apartment complex and you'd be here on the 4-part diagram. You could be a passive investor in that same apartment complex and appear here on the diagram. So there are also blends. Now the power of focus, though, is to know what you want, to create a solid focus for your next investment so you can hit whatever it is that your bullseye represents for you. So where's your investing comfort zone? It's crunch time. Your turn. Ask yourself the 2 investing comfort zone questions. Remember, how do you want to be paid? Cash flow or appreciation? And what role do you want to play? Active or passive? Pick your quadrant, A, B, C, or D, or something in between. But have that clear idea of what you're looking for, what you want before you go forward. And here's a really important tip. If you are someone who enrolls investors in your own projects, I absolutely recommend you ask your investors the 2 comfort zone questions right up front. The first 2 questions you ask them, I would recommend be these, because when your investors aren't clear on what they want, the decision process is quick and easy. They'll know almost immediately whether they want to hear more information about your investment, and everybody's going to sleep better at night. Here's the bonus I mentioned earlier. You can download your free copy of the Investing Comfort Zone workbook at our website, and you might even be as excited when you get it as Spider-Man is here. investortours.com/zone.php. investortours.com/zone.php. Write it down and go there now and you can pick up the free report. And from me to you, here's to your investing success in the quadrant of your choice, whatever that might be. Now, for more free training and reports and resources that are focused on commercial property investment, I invite you to come to our website, investortours.com. I've created a special report there. It's 14 pages long, totally free, called 35 Reasons You Should Invest in Commercial Real Estate. Head to the website, get the free report, and good luck. Well, there you have it. Your investing comfort zone in just 2 questions and less than a minute. Have fun with that worksheet, and don't forget to visit our website, investortours.com, for the 14-page free report, 35 Reasons Why You Should Be Investing in Commercial Real Estate. And here's to your financial freedom. Good luck.